Hey puppy trades, I want to do a video analysis update of the stock market. We'll talk about big tech like the NASDAQ, as well as Apple, Microsoft, Advanced Micro Devices, and Nvidia. We'll talk about Micron, the S&P 500, XLI, the industrials, Berkshire Hathaway and Prudential. We'll talk about Exxon, Mobil, JetBlue, Disney, SeaWorld, and Draftkings. We'll talk about the ARK Innovation ETF, Tesla, Next Air Energy, and NEO. We'll talk about XPEV, Etsy, ROKU, Square Cash, and Nano-Dimension. We'll talk about Trinseo Corp, Bitcoin, Ethereum, and Marathon Pine Group. So let's get right into it. We have the NASDAQ QQQ forming a wave 1 and an ABC correction puts in a wave 2 and then goes on a large wave 3 that we predict that is subdivided into 1, 2, 3, 4, 5 waves. It blows past the 161.8% extension of wave 1. So clearly a wave 1, wave 2, wave 3. Now an ABC correction is putting in a wave 4 at the 50% retracement that retested the wave 1 high. So the length of wave 1 placed at the wave 4 low will take the NASDAQ QQQ pretty conservatively on a rally to 395. That should happen in the next 2 months, certainly in the next 3 months. This is a wave 1 and a wave 2. Wave 3 and wave 4 will lead to a wave 5 that's at least the length of wave 1 placed at the wave 4 low. So for a wave 4 invalidation, we'll use the wave 1 high of 342. We'll use the 50% retracement of 349 as the stop. If those levels hold, the NASDAQ QQQ will go on a wave 5 to at least 395, likely by Thanksgiving, certainly by Christmas. Let's look at Apple right now. Apple's looking pretty good. This is the larger degree count. Let's talk about the smaller degree count right now. Apple forms a wave 1 and a wave 2 that has a large wave 3. Again, one we predict that is 1, 2, 3, 4, 5 waves. Now we have an ABC correction ending at the 50% retracement, putting in a wave 4. So Apple will go on a wave 5 that will either be the length of wave 1 placed at the wave 4 low or the length of wave 3 placed at the wave 4 low. If you look at Apple and you look at Advanced Micro Devices, the length of wave 1 placed at the wave 4 low would barely take them to a new high, right? So wave 5 usually goes a lot further higher than the wave 3 high, and for AMD it certainly is going to go past the wave 3 high. So I actually don't believe that Apple's wave 5 will be the length of wave 1 placed at the wave 4 low. I think Apple's wave 5 will be the length of wave 3 placed at the wave 4 low. That gives it a minimum target of about 173. So if we are calling this a wave 4, we don't want to see the 61.8% retracement of about 135 go. That's pretty close to the wave 1 high of 137. So if Apple's above 137 to 135, we can call this a wave 5. There will be at least the length of wave 3 placed at the wave 4 low. So I don't think Apple will go lower, but if it did, there would only be one way to count Apple. So if Apple did go a little lower, what would the only other count be? The only other count would be that this is another wave 1 and another wave 2. Apple's about to explode into a wave 3 of a wave 3 that will be at least the length of this rally placed at this low. We're still looking for a rally to 171, 172, but in this count, that'd be the minimum wave 3 target. We'd have a shallow wave 4 correction, go on a wave 5 higher. So that's the very aggressive view. I don't think we even need to take the aggressive view right now. I think the conservative view is the more accurate one. This is a wave 1 and a wave 2. This is a huge wave 3. We've ended a wave 4 right around the 50% retracement, a wave 4 that retested the wave 1 high. Now we're getting ready for a wave 5 that will be the length of wave 3 placed at the wave 4 low. That means in the next 2.5 months, 3.5 months, more conservatively, we'll see Apple go on a wave 5 all the way past 170. I want to see 135 to 137 not get broken for now. So let's talk about this idea of Apple going on a pretty big rally on the smaller degree, because that would line up very nicely with the larger degree count. The larger degree count for Apple says that it began a large wave 1 on the September 2020 quad witching date. This is wave 1 and wave 2. Wave 3 won't end until the 161.8% extension of wave 1, which is 171. So this is wave 1 and wave 2. Wave 3 is in progress right now. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. Wave 5 of wave 3 should be at least the length of wave 3 of wave 3 placed at the wave 4 low. That would take Apple all the way to 171 to complete this large degree wave 3. From there, I'd expect a shallow wave 4 correction before a wave 5 goes even higher. So Apple's looking good. I like it above 135 to 137, but even if it did go a little lower, bulls would still have a lot of upside. I still think we're going to see 170 most likely by the end of the year before a shallow wave 4 correction and a wave 5 that could take Apple into the 200 range in 2022. So Apple's looking good. Let's look at Microsoft right now. Microsoft is a wave 1 and a wave 2, a huge wave 3. Once again, a wave 3 that we predict. Then we have an ABC correction ending a wave 4 right at the 38.2% retracement. So the length of wave 1, placed at the wave 4 low, says in the next 2 or 3 months, Microsoft will at least go on a wave 5. There will be at least the length of wave 1, placed at the wave 4 low. That will take Microsoft to 319 for waves 1, 2, 3, 4, and wave 5. So we should see that the wave 4 holds above the 50% retracement of 271 for the invalidation and above 279 for the stop. We stop right at the 38.2% retracement. That's uncanny. That's a wave 1 and a wave 2. Huge wave 3. We've ended a wave 4. We're going to go on a wave 5 in the next 2 or 3 months. That takes Microsoft to 319. Great template for big tech. Let's talk about AMD. Advanced Micro Devices looks good. We'll talk about this short-term view right now on this count. You can ignore this trend line. I just draw this trend line because I saw another Elliott wave theorist. They were using this as evidence that this corrective cycle has ended. Some Elliott wave theorists will use a downtrend break, but for me, it's got to be very uncanny. You don't want to be fudging trend lines and combining that with wave theory. That's kind of like mixing Xanax with Everclear, but this is a wave 1 and a wave 2. This is either another wave 1 and another wave 2, or it's a wave 3 and a wave 4. I think that this is a wave 1 and a wave 2. We're going to go on a massive rally that's going to be at least the length of wave 1, placed at the wave 2 low. That will take AMD to 138. Now, that would be pretty aggressive, and we don't even need to be aggressive right now. In that view, AMD going to 138 would be the minimum wave 3 target. We'd have a shallow wave 4 correction and go on a wave 5 higher. So we don't even need to take that view right now because 138 is still a target in a pretty conservative count. The more conservative view of AMD says that this is a wave 1 and a wave 2. This is a wave 3 and a wave 4 that's ended at exactly the 50% retracement. So a wave 4, a nice invalidation level, is the wave 1 high. That's about 95. If this were a wave 2, the 78.6% retracement would be about 92, 93. That would be the wave 2 invalidation level. So either invalidation level for either count says that if AMD is above 92 to 95, we're expecting a big rally that is at least the length of this rally placed at this low. That means that for a waves 1, 2, 3, 4, and 5, the length of wave 3 placed at the wave 4 low will take AMD on a wave 5 to about 138. I'll stick to my time target that will conservatively happen by the end of the first quarter of 2022. So if AMD is above 92 to 95, I'm expecting a multi-month rally to at least 138. So AMD looks good. Nvidia is another one. Let's talk about Nvidia on the bigger term picture as well as the smaller term picture. I think that Nvidia is a very interesting chart. I think it's important to talk about right now that wave theory has a big advantage in that it is the only type of technical analysis that really sees a correction or a dip as a good thing. And we'll talk about that in a second because Nvidia could have just gotten rid of a huge dip. And we'll talk about that in a second. On the smaller degree right now, from the March 2021 low, Nvidia forms a wave 1 and a wave 2, has a massive wave 3 that we predict, then it has an ABC correction that puts in a wave 4, then goes on a wave 5 that's at least the length of wave 1 that we predict. So we had a 1, 2, 3, 4, and a wave 5 that was the length of wave 1 placed at the wave 4 low. So this 1, 2, 3, 4, 5 waves impulse could be ending or could already be finished right now. So let's talk about Nvidia's bigger degree picture because it's very interesting. On Nvidia's all-time count, it forms a huge wave 1 from the March 2020 low. So this 11-month rally that ends in the middle of February is all wave 1. And this huge kick out in March is wave 2. Wave 1 and wave 2. So wave 3 could be in right now because wave 3 was at least the length of wave 1 placed at the wave 2 low. It has satisfied the minimum wave 3 requirement. It was also very cleanly subdivided into 1, 2, 3, 4, 5 waves. So what if this large degree wave 3 ended for Nvidia? What if this large degree wave 3 ended for Nvidia? Then what is this correction that we had in September? What this correction that we had in September could have been is that we just got rid of a lot of dirty laundry for Nvidia bulls. Okay, we got rid of a massive, potentially wave 4 correction. And the idea is that in September, Nvidia may have corrected this entire cycle. So we'll talk about what this could be. This could be a wave 1 and a wave 2, and this is a 1, 2, 3, 4, 5 waves impulse that's ended a large degree wave 3. Now we are pulling back between the 23.6 and the 38.2% retracement to put in wave 4. So if Nvidia is above 186, that's the stop. The invalidation level is the 50% retracement of wave 3, that's 173. If Nvidia is above those levels, then this is wave 1, this is wave 2, and this is wave 3. We are ending or have ended a wave 4 and should expect a large degree wave 5 that will be at least the length of wave 1 in time and price placed at the wave 4 low. That means if Nvidia is above 173 to 186, it's a much larger term count, but the wave 5 target says in the next 11 months, we'll see a wave 5 that is at least the length of wave 1 placed at the wave 4 low, and Nvidia could go as high as 300, and it could be beginning this large degree wave 5 right now. The moral of the story, we may have just gotten rid of a very important correction, and we may be starting a new long-term cycle for Nvidia. It's just something to think about. It fits in with a lot of stuff in the semiconductor sector. You know, we have this idea that laggard semiconductors, they're going to take over. Just look at this Micron chart. I know Intel bulls, Taiwan Semiconductor bulls, Qualcomm bulls, you know, it's very frustrating, just like it was in the summer of 2020, right? And then what happened in October and November of 2020? Well, let's just ask Micron. Micron had a wave 1 and a wave 2. What did Micron do all summer of 2020? It made you wish you had picked AMD. It made you wish you had picked Nvidia. It made you wish you had picked anything besides Micron. And then what happens? The September quad witching comes around. October comes around. Oh, snap. The fourth quarter is well on its way, and Micron is exploding, okay? And it explodes for 2 quarters. Then it has an ABC correction. And then what did it do all this summer? It made you wish you were in Nvidia. It made you wish you were in AMD. And then the September quad witching day came around. And then the fourth quarter came around. I think Micron is getting ready for another 2-quarter rally. I think it's going to replicate this rally placed at this low, no matter how you count it. But the more conservative, more accurate view is that this is a wave 1 and a wave 2. This is a huge wave 3, and an ABC correction ended wave 4 for Micron at the 50% retracement. So if we are calling this a wave 4, we don't want to see 63 go, the 61.8% retracement, and we'll look for a wave 5 to be not the length of wave 1, because if Micron's wave 5 were the length of wave 1, right, and Micron went on a wave 5 that were the length of wave 1 placed at the wave 4 low, it wouldn't make a new high, right? Wave 5 can't end, you know, at 93. Wave 5 has to break the wave 3 high. I think wave 5 will be the length of wave 3 placed at the wave 4 low. We'll see Micron go on a rally to 123. Now, this rally is about 8 months. I think 6, 7, 8 months from now, we'll see Micron has reached 123, and it will hold above 63, which is a little tight, but it'll hold above 63 and go on a wave 5 to at least the length of wave 3 placed at the wave 4 low. We'll wake up probably in the first half of 2022 and see Micron in the 120 range. So it looks really good. It's kind of the laggard semiconductor of the day. Let's look at the S&P 500 right now. The S&P 500 completes an ABC correction and goes on a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction ends a large degree wave 2. So since the election, we have been looking for a wave 3 to be the length of wave 1 placed at the wave 2 low. We've been looking for 460 since November of 2020. Okay, and that's just the fact. We've been looking for 460. We came within 10 points of it this summer. This is a 1, 2, 3, 4, 5 wave 1, an ABC correction wave 2. Now we're within a large degree wave 3. A lot of wave theorists want to say wave 3 ended right here. I don't think SPY is in a wave 3 that's going to end before the minimum target. Okay, the minimum target for a wave 3 is the length of wave 1 placed at the wave 2 low. That means the minimum wave 3 target should be 460. I think we're still within this large degree wave 3. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. So we're ending a wave 4 of wave 3 right now. So we don't want to see the 38.2% retracement go. That's the stop, which is around 422. The invalidation level is the 50% retracement, which is 413. I expect SPY will hold above both of those levels. And in the next 4, 5, 6 months, you know, call the end of Q1, SPY should go on a wave 5 that is at least the length of wave 1 placed at the wave 4 low. We should see SPY go on a rally to 500. I expect that we will hold above 422 and 413 for now, and that this is wave 1, wave 2, wave 3, wave 4. The length of wave 1 placed at the wave 4 low gives a wave 5 target of 498, and that's 1, 2, 3, 4, 5 waves is where we'll end this large degree wave 3. Look for a shallow wave 4 correction and go on a wave 5 higher. SPY looking good. Let's talk about the XLI industrial ETF. XLI is a pretty one. We have a wave 1 and a wave 2, huge wave 3, and an ABC correction ends wave 4 at exactly the 38.2% retracement. Now, we've been looking for XLI to go on a rally to 113, 114 for a little bit, and since we've been looking for XLI to rally, we've seen a ton of the oil stocks rally. The point is, I think the oil stocks are making a leading indication right now that the banks and the tanks, the more industrial side of the market, is going to do very well in the fourth quarter and the first quarter. If we look at XLI, this is a wave 1 and a wave 2, huge wave 3, ABC correction ended wave 4. So I think XLI holds the 50% retracement of 95 and goes on a wave 5 that is at least the length of wave 1, placed at the wave 4 low. We'll see XLI go to 113. We've already seen a lot of oil stocks break above these highs. We'll talk about one that hasn't right now. I'm going to talk about Exxon Mobil, then we'll talk about the financials. Exxon Mobil, in my opinion, is kind of a nice template for what an oil sustained rally may look like. I think it's a wave 1 and a wave 2. We have this big old wave 3. Now remember, we had already predicted that XOP was going to break out into a wave 5, and XOP is already above this high. We're going to look at Exxon Mobil right now. I think that XLE is following XOP, and Exxon Mobil is kind of a poster child of that. It's a wave 1 and a wave 2, then it's a huge wave 3, and it looks like a wave 4 that ended at the 38.2% retracement. Pretty clearly a wave 4 in my opinion. Now we're setting up for a wave 5. There'll be at least the length of wave 1 placed at the wave 4 low. That means a wave 5 target for Exxon Mobil should be around 77. Now some astute L8 wave theorists are going to say, Puppy Trades, wait, this could be a leading diagonal. And you're right, this could be a leading diagonal where these 1, 2, 3, 4, 5 waves complete a large degree wave 1 for Exxon Mobil. So I think kind of the safest thing to do, stop below this low of 52. If 52 holds, we've ended a wave 4. We're within a wave 5 right now. The length of wave 1 placed at the wave 4 low gives kind of the ideal wave 5 target of 77. We'll get an additional wave 5 target by just drawing an upper trend line from the wave 1 high, through the wave 3 high, and that's kind of going to give another gauge for where this wave 5 may end. But I think ExxonMobil's got more upside to around 77. If that's going to happen during the same time frame, most likely that XLI is making a rally to 113. This idea of a 2.5, 3-month rally, it's playing out in a lot of industrial names right now, especially in the oil sector. I think ExxonMobil and XLI, they're going to go follow XOP. So we'll look at some other names in the more banks and tanks side of the market right now that may follow some of the leaders in these sectors. So Berkshire Hathaway, if we looked at the chart of XLF and the charts of Bank of America, they look very similar to Berkshire Hathaway, except XLF has already broken above all these highs, and Bank of America has already broken above all these highs. And we'll look at Prudential in a second. Prudential has already broken above all these highs. I think the largest XLF holding, which is Berkshire Hathaway, is pretending to be a laggard right now. This is a wave 1 and a wave 2. This is a huge wave 3 and an ABC correction to put in wave 4. Right between the 23.6 and the 38.2, we then go test the wave 4 low. We don't break below it. So I think we're within a wave 5 as clear as day right now, that at the very minimum, and I stress the word minimum, we'll take Berkshire Hathaway to 310. So the wave 5 destination is 310 as long as we're above about 266 to 270. Then we are within a wave 5 that goes to 310. I think this is wave 1 of wave 5 and wave 2 of wave 5. We're going to see an explosive wave 3, 4, and 5 of wave 5 take Berkshire Hathaway on a really, kind of nice run. I think that the banks and the tanks, a lot of people, they're going to just neglect those, and it's going to come back to bite them. It really will. There's more stocks in the market than just the NASDAQ 100. But anyway, we have a wave 1 and a wave 2 for Prudential, ticker symbol PRU. It's just another financial. I don't want to sound like a broken record talking about XLF in every video. So we'll talk about Prudential and BerkB. This is a wave 1 and a wave 2, huge wave 3 and a wave 4. So you guys do realize that the XLF financial ETF hit a new all-time high yesterday, right? You may not have realized that if you just stare at SPY. But anyway, Prudential also hit a new all-time high recently, or at least it broke above this wave 3 high. This is a wave 1 and a wave 2. This is a huge wave 3. Now we've ended a wave 4, and we're done a wave 5. There will be at least the length of wave 1 placed at the wave 4 low. That means Prudential should go all the way to 130, likely this quarter. And this is the wave 5 destination. Wave 5 is subdivided into wave 1 of wave 5, wave 2 of wave 5, waves 3, 4, and 5 of wave 5. We'll take Prudential up to about 117, shallow wave 4 correction, wave 5 to 127, 130. Prudential looks good to 130. It's certainly going to hold above 97 for now, but it's just kind of a nice template for more upside in the financials. We talk about Exxon Mobil going on a nice rally. I think one thing that even I may be doing is kind of underestimating the size of the rally that industrials and the banks and the tanks may have. So if we look at JetBlue, Carnival Cruise Lines, they're kind of sending this nest message right now. This for JetBlue looks clear as day, like a wave 1 and a wave 2. This is another wave 1, and now we're ending a corrective wave at the 61.8% retracement. So it doesn't really make sense to call this a wave 3 and a wave 4 that ended at the 61.8% retracement. Unless you have a really volatile stock with an extremely high beta, a 61.8% retracement is labeled as a wave 2. That means the length of wave 1 placed at the wave 2 low is going to give a 78.6% retracement as the kind of stop level and the invalidation level. I want to see JetBlue hold above 12.34, and if it does, I've got really big plans for it. The length of wave 1 placed at the wave 2 low will take JetBlue to about 26. We'll have a shallow wave 4 correction and we'll go on a wave 5 higher. So I think JetBlue is going to replicate this rally that is from basically late July to early April. So it's a multi-month rally, 6, 7, 8 months, but I think it points to the idea that we're going to see this rally get replicated twice more. This is wave 1 and wave 2. The length of wave 1 placed at the wave 2 low gives a wave 3 target for JetBlue of 26. We'd have a shallow wave 4 correction, then go on a wave 5 that would go the length of wave 1 placed at the wave 4 low. So I conservatively say a wave 4 will retest the wave 1 high. So if the length of wave 5 were wave 1 placed at the wave 4 low, then wave 5 could take JetBlue into the 30s. Now, it sounds ridiculous to talk about JetBlue going to 34 right now, but this is a 1-2-1-2 Elliott wave nest. So if JetBlue is above 12.34, it's got a lot of upside. It's going to the mid 20s before a shallow wave 4 correction and a wave 5 to the upside. I think JetBlue and I think a lot of these airlines, they're going to be even catching me off guard with kind of how big these rallies are. Disney is a reopening stock that's looking really good. It's an ABC correction, and it's a wave 1 and a wave 2, a huge wave 3, and an ABC correction ending wave 4. So we're seeing all these reopening related names like the oil stocks start to lead. They're starting to break out. We'll look at SeaWorld in a second. But the point is, we've already seen a lot of stocks already break above kind of these same relative highs that we're asking right now. Is Disney going to break above this? I think we know that Disney is going to break above this. A lot of people want to say that we're going lower, where we should look for this wave 2 right now. If we got this wave 2 to, below 150 to 140, then it'd be very simple. This is wave 1. This is wave 2. This is the generational buying opportunity of a lifetime. I don't think it's going to be that easy. I think we have another wave 5 right now. This is the wave 1 and a wave 2. This is the wave 3 and ABC correction. We've ended wave 4. We're not going to go below 167. We're not going to go below 166. The 50% retracement would be a little wider of an invalidation level, but I really don't think we see 166, 167 go. I think we've put in wave 4. We're going to go on a wave 5 that is at least the length of wave 1, placed at the wave 4 low. I'm looking for Disney to go to at least 216 with the amount of time that this basing pattern has taken, all this consolidation. We're seeing oil stocks explode. We'll look at SeaWorld in a second. I'm starting to prepare for the idea that wave 5 is going to be a lot further than the length of wave 1, placed at the wave 4 low, and that 216 may be too conservative of a target for Disney. Let's look at SeaWorld right now. SeaWorld is another reopening name. It forms a wave 1 and a wave 2. I think SeaWorld is within this huge wave 3. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. So the point is, it doesn't really make sense to be calling for more lows for Disney if we think that JetBlue and some of these reopening names, some of these oil names are going to go much higher. I think that SeaWorld is kind of the pinnacle of that, where it doesn't make sense to call for more lows for Disney if SeaWorld is breaking out to new highs right now. I think SeaWorld is a leading indicator right now for Disney in the travel and leisure sector. We also have a lot of supporting evidence. That whole reopening sector looks really good. This is a wave 1 and a wave 2. We're in a large degree wave 3 right now for SeaWorld. This is wave 1 of wave 3 and wave 2 of wave 3, wave 3 of wave 3 and wave 4 of wave 3 ended at the 50% retracement. SeaWorld at least should go on another rally higher that is at least the length of wave 3 placed at the wave 4 low. The wave 5 target for SeaWorld is as high as 73, right? So if SeaWorld's going to 73, Exxon Mobil is going to 77, XLI is going to 113, Disney's not going to be tanking to the 150s, the 140s during that time. I certainly don't believe so. And if it is, that would just be the greatest buying opportunity ever. But I don't think it's going to happen like that. Here's DraftKings. You can get a sneak peek of my large degree count, but I'm only trying to talk about the short degree count right now. This is an ABC correction for DraftKings, and this is a wave 1 and another ABC correction putting in a wave 2. I think this is another wave 1 and another wave 2. So DraftKings is really simple. Wave 1 is invalidated if we go below. The idea of a wave 3 is invalidated if we go below the wave 1 low. So if we go below 42, then this is invalidated. And if we're above 42, there's a ton of upside. So wave theory, your levels to levels 2, you just have the levels that actually matter. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So the length of wave 1 placed at the wave 2 low gives a wave 3 target of 70 before a shallow wave 4 correction and a wave 5 higher. So we've got two pretty clear ABC corrections ending at the 61.8 and 78.6% retracement. This is looking really good. I mean, if DraftKings is above 42, we're going to see some fireworks out of DraftKings. The length of wave 1 placed at the wave 2 low will give a minimum conservative wave 3 target of 70 before a shallow wave 4 correction and a wave 5 higher. I'm looking for this wave 5 to get hit pretty conservatively, and we'll see DraftKings hit 88 in the first half of 2022, possibly even the first quarter of 2022. DraftKings is one that I've got DraftKings number. But anyway, let's talk about the ARK Innovation ETF. ARK is looking good. It's, falling down a little bit, but this is an ABC correction. It's a wave 1, and now another ABC correction, ending at exactly the 61.8 and the 78.6% retracement. So wave 1, wave 2, if we're above, a really tight stop would be the 78.6% retracement of 104. The true invalidation level, it's a nice level to trade against, is this wave 1 low of 97. I don't think either go. I think this is wave 1, ABC correction ends wave 2, right between the 61.8 and the 78.6% retracement. We're going to go on a huge wave 3 to the 161.8% extension of wave 1. That's 154 before a shallow wave 4 and a wave 5 higher. So I think that the ARK Innovation ETF looks really good. This is wave 1 and wave 2. The wave 3 target is 154. I think we see the wave 3 target get kind of tested towards the end of the year. I'm looking for a pretty big rally for ARK before a shallow wave 4 correction. And then ultimately in the first half of 2022, most likely the first quarter, we see ARK go all the way on waves 3, 4, and 5 to 178. So wave 1, ABC, wave 2, the length of wave A placed with wave B high is where wave C ends. Between the 61.8 and the 78.6% retracement, we'll see a wave 3 take ARK up to 154 before a shallow wave 4 correction and a wave 5 higher, and that's all over, Cathy sector. If we look at Cathy in her sector right now, here's Tesla, one of the largest holdings. Guys, by the way, Cathy Wood manages an ETF. She can't have more than 10% of Tesla in her portfolio. Don't let these furus kind of scare you. But anyway, this is a wave 1 and a wave 2. This is a huge wave 3. I promise you, Cathy's only selling Tesla because it's going too high. Okay, that's a good problem to have in her world. But this is a wave 1 and a wave 2. This is a huge wave 3. Now an ABC correction ending a wave 4. In my last video, we talked about the idea. Yeah, this could be another wave 1 and another wave 2. In-phase energy and for solar certainly support that idea. But on the bigger degree right now, this is at least a wave 1 and a wave 2, a huge wave 3 and a wave 4 that ended at the 38.2% retracement. So I think this is a large wave 5 in progress. This is wave 1 of wave 5 and wave 2 of wave 5. We've closed above the wave 1 high of 780. So we've kind of confirmed we're within a wave 3 right now. The wave 3 minimum target, or I should say the textbook target, is 929 before a shallow wave 4 correction and a wave 5 higher. If we get to 929 in the short term, I personally wouldn't hold my breath for this wave 4. This is just a model to see what a wave 5 higher would eventually look like. The wave 5 destination is 1368, 1370. Only a ignorant fool would try to short Tesla at 929 because that's the 161.8% retracement. I think only a more ignorant fool would sell all their Tesla at 929 before a shallow wave 4 correction and a wave 5 to the upside. Probably best to just hold through the wave 4 because this is going to 1368 at least for this ultimate wave 5 target. Tesla looks really good. It's starting to rally. It held up during the entire September sell-off. Now it looks like the market's getting ready to rip. So the stocks that hold up best during the sell-offs, they're the ones that fly the most when SPY starts to get humming again. So Tesla, I'm thinking it's looking pretty good. It's getting far away from invalidation levels, but for me, it's pretty clear. Stop loss in profits, and then just ride this to 1368. It looks good. We'll see 1368 very kind of towards the end of Q1. That's kind of what I'm looking for. But anyway, let's talk about Next Area Energy. It's looking pretty damn good. It's a clean energy stock. It's an ABC correction, and then it has a large wave 1 and a wave 2. I think this is another wave 1 and an ABC correction putting in another wave 2 at the 61.8% retracement. So this is the largest clean energy provider in the world, and it is nesting right now. This is a big old nest. Okay, so this rally is from 519 to 907. Less than 4 months, less than 4.5 months, we're gonna see next area energy go on a huge wave 3. And wave 3 will be at the very minimum, the length of wave 1 placed at the wave 2 low. I mean, and this is just a nest right here. It's a 1-2-1-2 Elliott wave nest. Why can't we call this a wave 3 and a wave 4? Because we're at the 61.8% retracement right now. So that's kind of what I've been saying for, Apple and AMD. If we did go down to the 61.8% retracement, which I'm not expecting, that would actually be a good thing. That'd be more bullish, because then we could only count them as 1-2-1-2 Elliott wave nest. And that's what next area energy is. It's another wave 1 and a wave 2 ending at the 61.8% retracement. So the length of wave 3 will at the very minimum be wave 1 placed at the wave 2 low. We'll see next area energy go hit 92. That's just way too conservative. That's a minimum wave 3 target. We'd have a shallow wave 4 correction. Wave 4 conservatively retest the wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. That could take next area energy all the way to 102. And even that's pretty damn conservative. But I think next area energy, it's got 20% more upside. It's in the clean energy sector. I'm looking for it to explode and go hit 100 very conservatively by March, in my opinion. I think it'll hold above 74. The 78.6% retracement is a pretty tight stop. Super wide invalidation, not too wide, but the wide invalidation level would be the wave 1 beginning, which is 71. I don't think 71 or 74 goes. I think next area energy is about to explode out of this nest into the 90s and eventually 100. Early into 2022. Let's talk about NEO and XPEV. So NEO got an upgrade. At the 78.6% retracement. Anyway, that's probably not enough evidence for some of you guys. But anyway, this is an ABC correction. This is a wave 1 and an ABC correction putting in a wave 2. Now, who was it? Goldman that came out. They said that NEO's got more upside. I agree with them. I probably agree with them for different reasons, but I do think NEO has more upside. This is a wave 1 and a wave 2. If it was extremely tight, we say wave 2 is already in if we're above 33. That's a little tight. I think that we're still expecting a monster wave 3 if NEO is above 30. This is wave 1 and wave 2. We're seeing Tesla rip. We're about to see next area energy explode. NEO's not going to be left behind. NEO's not going to lag, all those clean energy names. You know that. This is a wave 1 and a wave 2. NEO's just luring you to sleep before it explodes. And it will. It's going to go on a wave 1 and a wave 2. It'll hold above 30 and go on a massive wave 3 to the 161.8% extension, which is 70, before a shallow wave 4 correction and a wave 5 higher. I'm looking for NEO to double. It could double by the end of the year, but I'm looking very high expectations for NEO in the early 2022, that this is wave 1 and wave 2. We're going to explode into waves 3, 4, and wave 5. That ultimately wave 3 would take NEO to 70 before a shallow wave 4 correction. I'll make sure you guys can see this. Before a shallow wave 4 correction and a wave 5 that takes NEO a lot higher into that 85 90 range. The full count for NEO, it just kind of looks something like this. This is all a massive wave 1 and a massive wave 2. So this looks way too messy, but that's why I've been focusing on this shorter degree count. I think NEO's in a huge wave 3 right now, so we'll get it a little cleared up. We're within a large wave 3 on the large degree. We're within a wave 3 on the smaller degree as well. So this is the only count that matters. If NEO is above 30, this is wave 1, this is wave 2. The wave 3 target is 70 before a shallow wave 4 correction could go as deep as 61, 56, and then a wave 5 that is at least the length of wave 1 placed at the wave 4 low. That could take NEO into the mid 80s, possibly the 90s, early into 2022. I think that NEO is going to go see 70 in pretty short order, and I'm really looking for some fireworks out of NEO in the fourth quarter. I can say that pretty confidently. Love it above 30. XPEV is another one. It's starting to turn around. What XPEV and Li Auto could be is that they have formed on the large degree a wave 1 and an ABC correction wave 2. The length of wave 1 placed at the wave 2 low will take XPEV all the way to 80. That's the ultimate wave 3 target. We may have the path. How we're going to get there, this could be another wave 1 and another wave 2. We're going to explode into a wave 3 of a wave 3. The wave 3 kind of small target is 63 before a shallow wave 4 correction and a wave 5 higher. So we've got the path for XPEV. We have the path. How we're going to get to 80. Right now, a very tight stop would be the 61.8% retracement. That's probably way too tight. The 78.6% retracement would be the only kind of reasonable stop. If XPEV is above 28 to 32, it could explode out of a wave 3 of wave 3 that will ultimately take it to 80. The kind of short-term wave 3 target is that this is a wave 1, this is a wave 2, so the next wave 3 target is the 161.8% extension of 63 before a shallow wave 4 and a wave 5 higher. XPEV looks good. I think it's going to rally with Neo. A tight stop would be 32 to 28. I'm in it for the long haul from the mid-20s, so I'm just going to keep holding in it, but let's talk about Etsy, Roku, Square Cash, some more, Cathy names. This is Etsy. It looks really pretty. By the way, I predicted this huge Etsy run last year by doing the simple bull flag pattern. The length of this rally placed at this low. That was exactly where Etsy hit and turned around. But anyway, from that high, we completed an ABC correction, a gorgeous kind of overlapping ABC correction, clearly a corrective structure. And then from this low, I believe Etsy began a wave 1 and a wave 2. Now it's within a huge wave 3 that will ultimately take it to about 247, kind of 247 in Q4. Consolidate, and then go on a wave 5 in Q1. That's kind of what I'm looking for. I think this is a wave 1 and a wave 2. Most likely this is another wave 1 and another wave 2. So that means that Etsy going to 247 for wave 3 is probably going to end up being conservative, but I think Etsy looks something like this. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. This isn't a bad low to trade against of 194. I think Etsy holds 194, goes on a wave 3 or completes wave 3 up to at least 247 before a shallow wave 4 correction and a wave 5 that is at least the length of wave 1 placed at the wave 4 low. All in all, in the first half of 2022, pretty conservatively, waves 1, 2, 3, 4, and 5 should take Etsy into the mid/upper 180s. So I think it looks really good. For now, I like trading against the low of 194. There's some nice lows to trade against right now. Trading Draftkings against 42, trading Neo against 30, and I would add trading Etsy against 194. Look pretty nice to me. So anyway, that's Etsy. Here's Roku. Roku looking pretty damn good. Starting to turn around. We've seen Netflix explode. We're about to see Amazon explode. But this is wave 1, ABC correction wave 2, huge wave 3 for Roku, then a wave 4. I mean, this is just the algos playing with you. They end at exactly the 50% retracement, right? So you don't believe in wave theory? Too bad. The algos are programmed to it. This is a wave 3 and a wave 4, ending at exactly the 50% retracement. And that's because they're trying to trick me. They want me to call this a wave 3 and a wave 4, and I will, because I'm going to be safe. But this is a wave 3 and a wave 4. The length of wave 3 placed at the wave 4 low gives a minimum target of 707. Now, the point is that because we're at the 50% retracement, that may not be a wave 3, that may not be a wave 4. It could certainly be another wave 1 and another wave 2. And then the length of this rally placed at this low is just the minimum wave 3 target of 707. We have a shallow wave 4 correction and go on a wave 5 higher. That's the more aggressive view. It's probably the more accurate view. We'll take the more conservative view right now. The more conservative view right now for Roku is that this is a wave 1 and a wave 2. This is a large wave 3 and a large wave 4. We will hold above the wave 4 low of 272, clear as day. And this is wave 1 and wave 5 and wave 2 and wave 5. Waves 3, 4, and 5 wave 5 are going to take Roku up to 707. I'm looking for 707 early into 2022. Most likely, in my opinion, the end of Q1. I talked about Roku right here before it exploded. This explosion ended up being a wave 1. Now it's a wave 2. Waves 3, 4, and 5 will be even more explosive. My question is, will we go past 707? If we go past 707, then there's only going to be one way to count Roku, and that's a 1-2 and then another 1-2. Elliott wave nest, 707 would be the minimum wave 3 target. We'd have a shallow wave 4 correction, go on a wave 5 higher. So Roku looks good. Square Cash, there's only one way to count Square Cash. I'm excited. This is exciting. There's only one way to count Square Cash right now. That's that this is an ABC correction, and this is a wave 1 and a wave 2. And this is another wave 1 and another ABC correction ending wave 2 at exactly the 61.8% retracement. So why am I saying there's only one way to count Square Cash? Well, when Square Cash was at the 50% retracement, we could have counted this as a wave 3 and a wave 4. But now that Square Cash is at the 61.8% retracement, there's only one way to count it. We don't really need the 38.2% retracement. This is clearly a wave 2. So we have another wave 1, and ABC correction puts in a wave 2, exactly the 61.8% retracement. Very tight stop would be 222. The kind of wider wave 2 invalidation would be the 78.6% retracement of 213. But I think Square Cash has given some great evidence. It's just like Next Era Energy. In fact, these charts are almost identical. I'll probably post an analog this weekend. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. Wait a minute, haven't we just kind of seen that? Didn't we just talk about this with the largest clean energy provider, a wave 1 and a wave 2, another wave 1 and another wave 2? But anyway, Square Cash now sending that nest message. Wave 1, wave 2, wave 1, wave 2. The length of wave 1, this rally that's less than 3 months, less than 4 months, definitely less than 4 months, will be replicated at least twice. The length of wave 1 placed at the wave 2 low will take Square Cash all the way to 319. That's the minimum wave 3 target. We'd have a shallow wave 4 correction that will conservatively retest the wave 1 high. Then wave 5 is at least the length of wave 1 placed at the wave 4 low. We could see Square Cash for waves 1, 2, 3, 4, and 5 go all the way to 385 for waves 3, 4, and 5. Square Cash looks really good. If it's above 222, that's kind of the tight stop. We'll use 213 as the invalidation level for a wave 2. Square Cash looks good. Nano-Dimension, this one hasn't looked good. It's taken a while. It's been at 0% implied volatility, ranking percentile all year. Almost always, if a stock has 0% implied volatility, ranking percentile, it's got a very liquid options market. Generally, it gets very explosive. Nano-Dimension has just been a dud for a little bit. It's had 0% implied volatility, ranking percentile almost the entire year. And I think it's still getting ready for a massive move. It's a wave 1 and a wave 2 on the largest degree. Then it's another wave 1, cleanly subdivided into 1, 2, 3, 4, 5 waves. That's a wave 1. Now an ABC correction ending wave 2. We're still between the 78.6 and the 78.6% retracement. It's not like Nano-Dimension's gone down. It's just gone sideways. I think it's still gearing up for a massive rally. I love seeing an impulse high get tested. We're testing this high of 4.89. That's right around the 78.6% retracement. Man, it's still looking good. This is going to be a huge wave 3 of wave 3. This rally will get replicated in the length of wave 1, placed at the wave 2 low. So take Nano-Dimension to 21. So the time target got invalidated when we closed below this low of about, I think this was 5.39. But I'm still expecting a huge wave 3 to be at least the length of wave 1, placed at the wave 2 low. That would probably take multiple months to occur. But once this gets going, it's going to be very quick. And one thing I want to say about some of these smaller names that have much higher risk rewards is that we've been punished as a market for taking chances on these names that are very small in 2021. I don't think that's going to continue as a broad trend, and I've got some evidence for that. This right here is a ratio chart of IWC, the microcaps, to the S&P 500. So this measures the relative outperformance of the smallest companies in the market, IWC, to the large caps, the S&P 500. What this basically shows is that just like a regular wave count, IWC was outperforming the S&P 500 for most of a year. For March 2020 to March 2021, the small caps were outperforming the S&P 500. Since March 2021, the small caps, or I should say the micro caps, IWC, have dramatically underperformed the S&P 500. Now, it looks like we are forming a pattern that we're about to see on another chart that's denominated in US dollars. We'll look at Trinseo, because this is the exact same pattern as Trinseo. It's a huge wave 1 that takes the form of a bull flag, and then a wave 2 that ends at the 50% retracement. And we're looking like we're breaking this downtrend line right now. We're about to go on a huge wave 3 for the ratio between the microcaps to the S&P 500. All that this means is that I'm expecting another year, even more actually, of outperformance of IWC, the microcaps, to the S&P 500. What I'm trying to say, long story short, is that I think that the reign of the large caps over the smaller companies is coming to an end, and that in the future, in the short future, we are going to see that the people who take advantage of the opportunities in these smaller companies in the market, they're going to get rewarded, not just in an absolute basis in terms of US dollars, but I also believe they'll be rewarded on a relative basis, because the people who hypothetically invest in micro caps, the smaller companies, versus the S&P 500, I think they're going to start to outperform. This is a 1-year period of outperformance. Now a consolidation period of underperformance, I believe, is coming to an end. We're about to see the microcaps start to outperform the S&P 500, and this could be a trend that lasts for years. Let's look at Trinseo. All I'm trying to say is that Trinseo is basically the exact same pattern we just looked at. Trinseo is kind of a smaller cap, so the idea right now is that there's a lot of small cap, micro cap companies that aren't just in growth. A lot of these smaller names are in the industrial side of the market, the material side of the market. Those are other places to find some alpha in the coming quarters. Trinseo is just looking really pretty. It's a 1, 2, 3, 4, 5, huge wave one, an ABC correction that ended at exactly the 50% retracement. It looks like it's put in wave two. This chart is identical to IWC versus SPY, that exact same bull flag down to the date from March 2020 to March 2021. Now we're ending that underperformance. I think we're going to see this huge breakout for Trinseo Corp. The length of wave one, placed at the wave two low, says Trinseo is going all the way to 106. This is a nice downtrend break. I think it's evidence. We're seeing the material stocks. We're seeing some of these smaller companies slowly but surely are going to begin to outperform the large caps. So moral of the story, I understand that the small caps, the micro caps, the more risky stocks have been underperforming. That's going to come to an end very soon. Let's look at Bitcoin. Let's look at Ethereum. Oh my gosh. I've been waiting all video to talk about these names. We didn't go up another 1,000 points, did we? Okay. But anyway, many of you guys may be aware of something called Wave C. Okay. What in the world is Wave C? Well, bad Elliott Wave theorists, I'm sorry, but bad Elliott Wave theorists are saying right now that this is a Wave A that Bitcoin is completing from this high. This is a Wave A. And so what we're ending right now is a wave B, and we're going to expect a wave C that's going to be more downside and take Bitcoin to 20K. Okay, this is called bad Elliott wave theory. This is not a wave A. This is not a wave B, and we shouldn't be expecting a wave C. And we have a lot of evidence for that right now. But we've had evidence of that for a while, such as the fact that Solana and Cardano have already exploded above this high, right? So we've known for a very long time that there was more upside in crypto. But let's just look at Bitcoin right now. This is a 1, 2, 3, 4, 5, huge wave one. This is an ABC correction, huge wave two, ending between the 50% and the 61.8% retracement. This is a monster wave two low that we put in. It's invalidated if Bitcoin goes below 28.9K. Okay, that's far away. We'll talk about a tighter kind of stop in a second. But if this is all wave one and that's wave two, then Bitcoin's in a massive wave three. The minimum wave three target is the length of wave one placed at the wave two low. That gives a minimum wave three target of about 91,000. We'll call it 90K. Okay, that's the minimum wave three target. From there, we have a shallow wave four that will conservatively retest the wave one high before a wave five that is at least the length of wave one placed at the wave four low. That means waves 1, 2, 3, 4, and 5 should take Bitcoin as high as 125,000. And that's looking like it's going to happen. Let me plug in my Mac real quick. But I think Bitcoin's got more upside to 125K. And, you know, for anyone who doesn't get the message yet, there's no wave C. Okay? Wave C is a myth. Okay? That's not this A, B, C crap that you see on FinTwit ain't happening. Okay, that's not wave theory. This is not wave A, wave B, and wave C. Okay, if this was A, B, and C, then Cardano would have gone A, B, C. Solana would have gone A, B, C. Ethereum would have gone A, B, C. Okay, they didn't. They all exploded higher. So we've been expecting for a long time that Bitcoin was going to explode higher too, and it is. So let's look at the Ethereum count. We'll kind of zoom in a little bit for Ethereum. Ethereum is almost the exact same thing on the large degree, that this is all a huge wave one and a huge wave two. Let's just focus on Ethereum's short-term count for a second. From this low, it looks like Ethereum puts in a really important wave two low on the larger degree. But here's the thing. We don't really even care what Ethereum's done on the larger degree. Okay, it's this rally from the June low that matters. For Ethereum, this is quite clearly a 1, 2, 3, 4, 5, huge wave one. Then an A, B, C correction ended wave two between the 61.8 and the 50% retracement. This is wave one, that's wave two. The length of wave one placed at the wave two low gives a minimum wave three target of 4,954. From there, we'd expect a shallow wave four correction and a wave five higher. So we're going to know for a fact that Ethereum is within a wave three from this low when Ethereum breaks above about 4K. Okay, and here's the thing. Bitcoin's already above this wave one high. Okay, so this is 1, 2, 3, 4, 5 waves. Wave one, this is ABC. Wave two, the length of wave one placed at the wave two low. That's going to take Ethereum to near 5K. most likely 5K by the end of the year before a shallow wave 4 correction and a wave 5 that takes Ethereum much higher, as high as 6,700. So there's a lot of upside for Ethereum. You know, I think right now Ethereum will hold above 2,600, and then people will realize soon enough that there's no wave C. There's a huge wave 3 before a shallow wave 4 correction and a wave 5 as high as 6,700 early into 2022.